Okay. Now, here's a question for you. Say they have this property, the FHA loan, and let's just do a single family residence
Okay.
to make things easy. And they're ready to go from that property and they're ready to move up in the real estate world. They're not going to keep it and use it as an investment, but they're
Mhm.
going to use the equity that they've made for a bigger down payment on their next property.
Yep.
Do they have to pay capital gains taxes on that, or can they do a 1031 exchange?
You can do a 1031 exchange. That's usually what we recommend, depending on how much you are making on the sale
Okay.
of the home. So that will be dependent. But that 1031 exchange allows you to hold those funds aside for a specific time period to be able to purchase another home and directly use those funds to purchase the home. So that I always recommend checking with your tax professional there, but that is an option to use a 1031 exchange to try to avoid those capital gains tax, which can be pretty pricey.
Okay, awesome. So in order to do the 1031, we probably need to connect with a tax professional on that,
Yes,
and
yes.
they'll be the ones to guide us
To
through that.
guide you through that. Yep. And they'll take you through the specifics of what that needs to look like, but you can still do that and retain the same type of financing, right? So
Okay.
conventional FHA, you can even do it on VA, just depending on what your situation is.
Okay,
Yep.
awesome.
Yep.
So would you say, so now with FHA, it's 3.5% down,
Yep.
right? What are some other maybe nuances that we aren't thinking of that maybe a lot of clients? So do you need 2 years of a W-2? Do you need, how many jobs can you have had in the last year?
Yeah.
Are there any stipulations on any of that kind of stuff that's different than from, say, other types of loans?
Yeah, definitely. So with FHA, for your income history, they're a little bit more stricter compared to conventional, right? So with your income gaps, they're going to take a look at how your income is trending and where your employment has went. So for example, if you have a client who's recently changed jobs and there's more than a 6 month gap, it will take a little bit more to get pre-approved compared to conventional with the 6 months
Okay.
gap, but it really depends on your work history. If you've jumped around a lot, it may be a little bit more difficult, but if you've only had 2 job changes and it was pretty quick with you getting back to work, it's not going to be very difficult. We will make sure to take a look at their situation and go over that with them.
Okay.
With conventional, you can get away with longer job gaps, or if you recently were off of work for, let's say, a year and then had worked previously for 2 years before that, it's a little bit easier to get pre-approved. But it really is a case-by-case basis on that work history.
Okay.
The biggest thing, though, with FHA, which is a positive, is you get more room in your debt-to-income ratio.
Okay.
Typically, conventional is going to cap your debt-to-income ratio, which is just your income in relation to your monthly liabilities.
What is that debt to income? 50 to 53%? I know there's a front end and a back end.
Yes, yes. So typically the back end on conventional is anywhere between 45 and 50%,
Okay.
depending on where your credit is. The back end on FHA can go all the way up to 56.9.
Oh,
So
wow.
it's
Okay.
a pretty big, it can be anywhere from a 10 or 5 to 10% jump on your payment or your debt to income ratio.
Okay.
The front end for FHA typically gets capped around 47%. The front end on conventional sometimes can go higher than 47%. So it just depends, again, on your unique situation and how much debt you have. The difference between a front end ratio and a back end ratio, your front end ratio, they just look at your income in relation to your housing payment. The back end ratio is taking account for your debt as well that you're paying monthly.
So think credit cards, car payments,
Student loans,
child care,
yep,
all of that kind of stuff.